Is the individual investor hurt by HFT? These guys are trading for tenths of a cent, hundreds of cents. You know, Mr. Ackman gets into J.C. Penney. He's not trying to, but he's not trying to.
The public.
Yeah, but by how much, sir? That's my point.
How much? Why should they be able by a split second to run the public's orders?
What exactly? See, how hurt are they being? That's what my point is. I mean, I understand.
Why should they be hurt at all? Why
because we're talking about tenths of cents and hundreds of cents. If you're getting into a stock because you think it's going from A,
why don't you just give the individual investors to write them a check?
Listen, Mr.
That's crazy.
Folks, welcome to the Contrarian Trader. What you just saw was an excerpt of an interview from earlier in the week on CNBC. It can be found on CNBC.com. An exchange between Leon Cooperman of Omega Advisors, a great investor, and Guy Adami. And Guy Adami is coming off in this video as being kind of like the bad guy. I don't mean that to be. I personally like Guy Adami. That being said, what Guy was rationalizing in this video is something that I've been pounding the table on for years, is that these Wall Streeters, the Wall Street community, they live in their own bubble. It's their table. It's their ring. If you're the heavyweight champion of the world, they're the champions and we're the challengers. And they should have the advantage. Now, what Guy was saying was high frequency traders should have the advantage to front run, as Mr. Cooperman stated, and Guy Adami didn't argue. He agreed. They're front running our orders, and they're profiting off of us. Do you know that 70 to 80% of all bids in the market that you see are fake? They don't exist. So I take issue with Guy's position here. I think he's a gentleman. I think he's a great trader. I think he's a great TV personality. However, on this issue, I think he's wholeheartedly wrong. And Mark Cuban was also on this program. He was part of this exchange. It's not on here. I don't want to make it too long. But Mark Cuban's against this high-frequency trading as well, because it's a nightmare waiting to happen. This is what caused the flash crash a number of years ago. This is why there isn't a level playing field. And if you're playing the Momo trades, the high-momentum trades with high volume, that's where you're going to find the most manipulation. You need to pay attention to contrarian stocks. And I'll be releasing a video either today or tomorrow with regards to stocks that we're looking to either A, buy, or short, where the market isn't really that interested in them. And that's where I want to be. However, due to their good fundamentals or their short interest, they might present a good long opportunity. There's nothing wrong with that. But you need to wait for your setups. You need to wait for your flag formations after a breakout, draw your trend lines, and wait for that continuation rally higher if you're intent on going long. If you're looking to go short, you need to look for your double tops, your head and shoulders formations. And that's when you look to get short. For instance, take a look at the chart of Amazon. You need to watch the charts. It's an indicator of money flow, supply, and demand. So please pay attention to the charts. Daily chart, Amazon. We got short of Amazon right here. And on that very evening, the day I went short of Amazon using the 255 puts going out to January, one of the smart money guys or fast money guys comes out and says, "Oh, what's your trade of the day?" "Oh, buy Amazon." Well, we were right. He was totally wrong. Did they go back and say that was your trade of the day back then? You were wrong on that trade? No. But we scaled out twice. We took a quarter position off the table, half of the remaining position off the table. We sit with about a quarter of a position on the table. We're looking to add back in. Take a look at this inside day here on Friday. What we're looking for is a continuation breakdown. So we're looking to get short of Amazon again. I have a small position right now. We're looking to rebuild. We shorted here after this double top, enjoyed the ride down, saw this potential for a rally on the intraday charts, got out properly, scaled out properly, kept a little bit of position, and we're looking to short Amazon once again. What's another stock? Is that my only one-hit wonder? No. EDMC. Take a look at EDMC. We went long of EDMC here near the lows, and we rallied it up for a 5% gain. We took profits on Friday. So what's wrong with taking a nice 5% profit within a couple of days? And sure enough, I can tell you right now, there are no high-frequency traders inside of this stock. So your risk to reward is much further on your side, assuming that you're disciplined and that you use a stop-loss order. If you're not going to use a stop-loss order, then no type of trading is for you, and go to a mutual fund. That's the best thing for you. You need a disciplined approach. Okay, why do I think this market is manipulated? And when it does begin to correct, it's going to correct very, very hard. Let's go to 2012, one of the top performing sectors. And what you're looking at here is a weekly chart of the retail holders, symbol RTH. Again, a weekly chart. Take a look at this beautiful, beautiful rally. Unbelievable. Lows of the year were about $37 per share. We're approaching $46 per share. A very, very nice run in the retail holders. So you look at the chart on its own, and it looks like a great chart. It's to be bought, right? You could, if you're going to use a trailing stop loss order. However, what I need to bring to your attention is this, and this is what I teach members, is take a look at the volume. This is 2012. Here. Take a look at 2011's volume. Take a look at 2010's volume. Take a look at the 2009 volume, even up volume for that year. Volume is dropping off the cliff. So the question I pose is this. If there are no buyers out there and you have algorithms running the market and they, as soon as they feel any selling pressure, they remove the bids. Remember, 70 to 80% of all bids out there are fake. They don't exist. They're ghost bids. It should be outlawed. That's what Leon Cooperman was outraged with. I digress. Take a look at this volume here. And my question I'll pose to you, and I'll leave you with this. When this market begins to correct and the algorithms pull back their bids, and all of a sudden there's a big gulf between last bid and current real bid, who is going to step in and buy? I'll leave you with that thought. There is no volume. This is completely manipulated. So please, join the 14-day free trial offer. Learn how these guys trade. I just showed you 2 profitable trades that I made this past week. If you want to learn how to make money in this market, sign up for the 14-day free trial offer. Please subscribe for my YouTube channel. Enter your email address. I'll send you out the contrarian alerts. And I'll talk to you soon. Have a great weekend, folks. Bye-bye.